Welcome back to Bazaar Morning Call. Well, let's get a handle on what's happening in the world of commodities. Remember, Brent crude prices are at 10-month highs. Manisha Gupta is here. Manisha, what's the one commodity you're tracking today?
Sonia, thank you. Well, energy might be trading on the higher side, but the base metals have taken it slightly on the chin. We've seen all of them open with a slight decline, and the underperformance clearly comes in from copper here, which also has seen a decline ahead of all of those central bank meetings. The US Fed meeting announcement would come in today, while the street has made its peace with the fact that you wouldn't see an interest rate hikes in September. But remember, there are meetings in November and December as well, and there is still even a minute 35 to 40% probability that you will see another rate hike before this year ends. Also, the street is working with the fact that the interest rates may stay higher for a longer period, and that's weighing onto the markets. If you look at the prices itself, we've seen 2% of decline in copper for the month of September, and it is trading in the negative for this year as well by 1.5%. The China construction sector has recorded the worst dip in a decade, and also when you look at the manufacturing numbers that have come in from US and Europe have been on the weaker side, weighing onto the markets there. It is a time that you see the seasonal demand kicking in. September, October usually are that, but the inventories have been increasing and demand not so much. So we are sitting on a bit of a surplus at this point in time, which is something that most market analysts have been talking about as well. So when you look at the inventories itself, we are looking at stronger numbers. The Chinese refined copper production for a month of August is an all-time high, is what we've seen those numbers come in as. And the rising inventories at LME, which is up by 175% since mid-July, also seems to be weighing onto the market. So when you look at the breakup in the inventory picture itself, all exchanges together are holding 236,000 of inventories, which is up 47,000 in 2023 till time. Within this, the major chunk clearly seems to be lying with LME, which is holding highest inventories since May 2022. We also have seen inventories increase in New York. So the CME inventories are at 99,000. Shanghai inventories also have seen a rise, even if it is by modest, but 43,000 tons of inventories China also is holding. Markets are now awaiting for the China 1-year and 5-year PLR numbers. Modest stimulus measures that we've seen come in from China is not led a huge impact on ground, is the reason we are looking at higher inventories. Hedge funds also have been increasing their net short positions. Of course, the next cues would come in from the dollar index and all the monetary policy meetings lined up for this week.
All right. Thanks a lot for that.